Hi there, and thank you for joining us for this episode of PhillipCapital's Market Watch. I'm Ben, research analyst from PhillipCapital's Phillip Securities Research. In today's episode, we take a closer look at Micron's business, financials, and future direction of the business, and assess whether its valuations are justified. Let's dive right in. Micron is a global memory integrated device manufacturer, IDM, which designs, manufactures, and supplies its memory chips to leading semiconductor companies across the value chain, including chip designers such as NVIDIA, AMD, Broadcom, etc., and foundries such as TSMC and SMIC. Micron has four main business units: cloud memory, core data center, mobile and client, and auto and embedded. Its cloud memory business is the highest growth driver of Micron's revenue, spiking 2.6 times year-on-year to $13.5 billion in FY25, driven by its high-bandwidth memory chip RAM. Its HBM3E, third-generation enhanced memory chips are designed into NVIDIA and AMD's GPU systems. On the other hand, its core data center segment, CDPU, focuses more on mid-tier cloud and OEM data center customers, and storage solutions such as NAND and SSDs. In FY25, its CDPU segment revenue increased by 45% year-on-year to $7.2 billion. Shown here is an example of NVIDIA's Blackwell B200 chip with 8 stacks of Micron's HBM3E chips designed in it. Each stack of HBM3E is 8 chips high and can transfer data at a peak rate of 1.2 TB per second. Micron's next generation HBM4 samples are being shared with its customers. We estimate it to lead SK Hynix and Samsung, the other two players in the HBM space, in terms of chip bandwidth and speed. Micron's revenue by product consists of 78% DRAM, dynamic random access memory, and almost all remaining 21% NAND. DRAM's average selling price influences Micron's revenue significantly, as can be seen in the chart on the left. Most recently, an estimated 27% increase in DRAM pricing drove Micron's 2025 revenue to spike up by 57% year-on-year. The chart on the right explains the supply situation in DRAM. There is a strong negative correlation between DRAM prices in red and memory players' capex to sales ratio in blue. Both Micron and SK Hynix mentioned that their HBM products are sold out for 2026. By end of this year, we expect capex to sales ratio to fall, as we believe Micron's capex to sales would decline as Micron's spending is likely to taper ahead of the construction of their Idaho fabrication facility, also known as Fab, in 2027. Over the past 10 years, Micron's revenue and profit has undergone a series of expansion and contraction cycles. As seen on the chart on the left, each revenue and profits expansion and contraction cycle lasts roughly 7 to 9 quarters. On the chart on the right, Micron's forward price-to-book valuations in green also undergo expansion and contraction as shown in red, with the cycles lasting 4 to 8 quarters. The most recent expansion cycle started in second quarter 2025, hence we believe there is still room for valuation expansion. Shown here is Micron's historical and expected future balance sheet and cash flow figures. In FY25, operating cash flow increased by 106% year-on-year due to a 10 times year-on-year increase in PATMI, which is also known as profit after tax and minority interest. Micron's net gearing ratio also declined by 4 percentage points year-on-year in FY25, driven by the increase in operating cash flow, offsetting the 8% year-on-year increase in long-term debt to fund capacity expansion. Here, we present the valuation comparison for Micron against its key peers. We compare Micron to high-end processor companies like NVIDIA and Broadcom, and memory companies like SK Hynix and Samsung. Micron is trading at a FY26 PE valuation of 12.9 times, which is a 49% discount to its processor and memory peers average of 25.3 times. Overall, we have three main investment theses for Micron. Firstly, with Micron's high bandwidth memory chip offering the fastest speeds and bandwidth in the market, we believe Micron can chip away SK Hynix HBM market share when its HBM4 production ramps, beyond the end of calendar year second quarter of this year. Secondly, demand visibility remains strong, driven by hyperscalers raising their capex guidance. Meta and Microsoft, for example, have raised their 2026 capex guidance by 76% and 90% respectively. With an expected supply constraint, we anticipate DRAM prices to be driven higher, fueling revenue growth acceleration. Last but not least, Micron's strong presence in the US positions it well for further grants and benefits. For example, Micron received a total of US $6.4 billion, roughly 8% of its total assets, over the past 2 years for 3 planned fabs in the US. We estimate Micron to benefit from over $50 billion in tax savings over the next 5 to 6 years as its US fabs are being built. We recently initiated coverage on Micron with a buy recommendation, target price $500. Our target price is based on a 16.8 times forward PE ratio, a 34% discount to its peers' average FY26 PE. With that brings us to the end of this episode of PhillipCapital's Market Watch. Remember to like, share, and subscribe, and follow us on our social media platforms. Thank you so much and see you again.